Bitcoin just crashed below $63,000, and the fear and greed index has hit 5 out of 100. That is the all-time low, a reading that has only been seen 3 times since this index was created in 2018. But what I found in the on-chain data today is going to completely change how you think about this crash, because the people panicking right now are on the wrong side of this trade. If you are serious about building real wealth with Bitcoin and you want analysis based on actual data and not just hype, subscribe to this channel. I break down the institutional moves, the whale wallets, and the on-chain signals that most channels will never show you. This is the kind of content that separates people who panic sell from people who become generationally wealthy. So here is what happened. Over the last 24 hours, $468 million in leveraged positions were liquidated. Let me say that again. Nearly $500 million gone. In a single day, 137,000 traders were wiped out, and 93% of those liquidations were long positions. The largest single liquidation was a $61.5 million Bitcoin position on HTX. One trader, $61 million, evaporated in minutes. And it gets worse. Bitcoin is now trading around $63,000. That is a full 50% below the all-time high of $126,000 that we hit in October of 2025, half the value, gone in less than 5 months. The total crypto market cap has slid down to $2.27 trillion, and Bitcoin dominance is sitting at around 56%. Now, before you close this video and sell everything, I need you to understand something critical. And this is where I want you to pay close attention, because this is what separates the people who build wealth in crypto from the people who lose it. Drop HGOD in the comments if you are not selling during this crash. I want to see how many of us are still standing. The mainstream narrative right now is simple. Bitcoin is dead. The bear market is here. Get out while you can. And I understand why people feel that way. The fear and greed index is at 5. That is the lowest reading in the entire history of this index. We have been in extreme fear territory for 22 consecutive days. The last time we saw anything close to this was June of 2022, during the FTX collapse, when Bitcoin was sitting at $16,000. Before that, it was August 2019. Both of those times, the people who sold into that fear lost a fortune, and the people who held went on to see massive gains. But let me show you what is actually happening underneath the surface, because the headline numbers are only half the story. And what I am about to reveal is going to shock you. Let us start with the ETF data, because this is what everyone is pointing to as evidence that institutions are abandoning Bitcoin. And yes, on the surface, it looks bad. Bitcoin spot ETFs have now seen $3.8 billion in outflows over 5 consecutive weeks. That is the longest outflow streak since these ETFs launched in January of 2024. BlackRock's IBIT alone has lost $2.13 billion. Fidelity's FBTC has shed $954 million just last week. Another $316 million walked out the door. Now, here is what nobody is telling you about these numbers. If you look at the cumulative picture since launch, net inflows into spot Bitcoin ETFs still sit at approximately $54 billion. Total ETF assets are still hovering near $85 billion. BlackRock's IBIT alone carries over $51 billion. So while yes, there has been a pullback, we are talking about a 7% reduction from peak inflows. That is not institutional abandonment. That is portfolio rebalancing during a macro shock. And here is the macro context that is actually driving this. President Trump announced a new 15% global tariff framework. There is escalating tension with Iran. The Supreme Court struck down previous trade strategies. This created an immediate risk-off environment across all markets, not just crypto. The S&P 500 dropped. The Nasdaq got hammered. Gold surged to over $5,000 an ounce. And Bitcoin, which now has an 88% correlation with the S&P 500 over the last 24 hours, followed risk assets down. This was not a crypto-specific event. This was a global macro repricing, and that distinction matters enormously for what happens next. Hit that like button if this is making sense to you, because I need you to understand this data before I show you what the whales are doing right now. Now let me get to the on-chain data, and this is where it gets really interesting. Because while retail investors are panic selling and leveraged traders are getting liquidated, the largest and most sophisticated players in this market are doing the exact opposite. The exchange whale ratio has risen to 0.64. That is the highest reading since 2015. What does that mean? It means the top 10 deposits going to exchanges account for 64% of all inflows. Big wallets are moving Bitcoin. Now, some people interpret that as whales selling, and some of them are short-term whales. The ones who bought in the last 3 to 6 months are holding about $26 billion in unrealized losses. But here is what the bears are not telling you. Long-term holders, wallets that have held Bitcoin for over 155 days, have resumed accumulation. The holder net position change turned positive in late December and has stayed positive through February. This is the smart money. The people who have been through 2018, 2022, they are not selling, they are buying. And nobody, I mean nobody, is buying harder than Strategy Incorporated, formerly known as MicroStrategy. And this is where the story gets absolutely wild. Michael Saylor's company just made their 100th Bitcoin purchase. Think about that. 100 separate purchases since August of 2020. They added 592 Bitcoin last week for about $39.8 million. Their total holdings now sit at 717,722 Bitcoin. That is over 3% of all Bitcoin that will ever exist, held by a single company. Now here is the part that really matters. Strategy's average purchase price is approximately $76,000 per Bitcoin. With Bitcoin trading at $63,000, they are sitting on an estimated $6.5 billion in unrealized losses. $6.5 billion. And what are they doing? Are they selling? Are they panicking? Are they filing for bankruptcy? No, they just bought more. They have purchased 2,486 Bitcoin in the last week alone for $168.4 million. Michael Saylor posted the company's accumulation chart on X with one word: the orange century. Are you buying this dip or waiting for lower prices? Comment below. I want to hear from every single one of you. And Strategy is not alone. While BitDeer, a major mining company, did sell their entire Bitcoin treasury of 943 BTC, which made headlines and spooked some people, the broader institutional picture remains bullish. Abu Dhabi's Mubadala Sovereign Wealth Fund increased their Bitcoin allocation. Multiple public companies continued buying through the dip, and the mining hash rate has reached record levels, now exceeding 1.15 zettahashes per second. That means more computational power is being deployed to secure the Bitcoin network than at any point in history. Miners do not invest billions in infrastructure if they think the asset is going to zero. Now let me talk about the two scenarios that are playing out, because I promised you I would give you both sides of this, and I always keep my word on this channel. The bear case first. It is real, and you need to understand it. If we lose the $63,000 level convincingly, the next major support sits around $58,000 to $56,000. That lines up with the Bollinger Lower Band and previous congestion zones. If macro conditions worsen, if the tariff situation escalates, if ETF outflows accelerate, a flush to $50,000 is absolutely possible. Some technical analysts are projecting 30-day targets as low as $44,000. Standard Chartered, one of the largest banks in the world, lowered their 2026 Bitcoin target from $150,000 to $100,000 and warned that $50,000 was possible before a recovery. I am not going to sugarcoat this. The short-term picture has risk, but now let me show you why I believe the bull case is significantly more likely, and I have data to back this up. First, the velocity of this crash. VanEck published research showing that on February 5th, Bitcoin registered a negative 6.05 sigma move on the rate of change Z-score. In simple terms, this was one of the fastest single-day crashes in Bitcoin's entire history. It ranks among the top 15 most extreme velocity events ever recorded. And here is the critical insight from VayNex analysis. Events of this velocity historically exhaust panic selling rather than initiate prolonged cascades, particularly when not accompanied by systemic failure. And there has been no systemic failure, no exchange has collapsed, no major protocol has been hacked, no institutional player has blown up. This is, in VayNex's own words, orderly deleveraging, not capitulation. Second, the cycle history. Bitcoin has experienced a 50% or greater drawdown in every single 4-year cycle. It happened in 2014, it happened in 2018, it happened in 2022, and now it is happening in 2026. Every single time, without exception, Bitcoin recovered and made a new all-time high within 12 to 18 months. And this current 50% drawdown is happening with stronger fundamentals than any previous cycle. We have spot ETFs, we have corporate treasury adoption, we have sovereign wealth fund participation, we have record mining infrastructure. Third, Bernstein, one of the most respected Wall Street research firms, published their analysis just this week. While most analysts are slashing their price targets, Bernstein is holding their $150,000 year-end target for 2026. They describe the current environment as, and I quote, the weakest bear case in history. No insolvencies, no bankruptcies, no spectacular failures, just a crisis of confidence. And fourth, the fear and greed index itself. Every time this index has dropped into single digits, and it has only happened 3 times now, Bitcoin has gone on to produce massive returns within the following 12 months. After the 2019 extreme fear, Bitcoin tripled. After the 2022 extreme fear, Bitcoin went from 16,000 to 126,000. The pattern is clear. Extreme fear is where generational wealth is built. Not when everything feels safe. Not when everyone is bullish. Right here, right now. When the fear and greed index is at 5 and people are saying Bitcoin is dead, do you think Bitcoin hits $100,000 before the end of 2026? Comment yes or no. I am reading every single one. Now I need to be clear. I am not telling you to rush out and buy Bitcoin right now. This is not financial advice. I am sharing what the data is telling me and what I am personally watching. The smart approach, in my opinion, is to have a plan before the panic. Know what levels you are watching, know what percentage of your portfolio you are comfortable deploying, and understand that the people who bought when the fear and greed index was at 5 in 2022 turned every $1,000 into almost $8,000 within 2 years. The range I am watching is this. If Bitcoin holds $60,000 and we start seeing ETF outflows slow down, I believe we could see a recovery toward 85,000 before the end of Q2. If macro conditions improve, if tariff fears subside, and if the weekly ETF flow data turns positive, 100,000 by the end of summer is very much in play. And if Bernstein is right, 150,000 by year end is not fantasy. It is backed by data and institutional adoption that has never existed in previous cycles. Like this video, if you believe Bitcoin is going higher from here, let us see how many of us still have conviction when the market is testing us the hardest. The bottom line is this: retail is panicking. Leveraged traders are getting wiped out. The headlines are screaming bear market, and meanwhile, Strategy just made their 100th purchase. Long-term holders are accumulating. Mining hash rate is at all-time highs, and the fear and greed index is at a level that has historically marked the exact bottom before massive rallies. The question is not whether Bitcoin will recover. It always has. Every single cycle. The question is whether you will still be here when it does. Share this video with one other Bitcoin holder who needs to see this data right now. I will see you in the next one. Stay strong. We have been through worse than this.